Welcome to our weekly Forex forecast, and this is for trading for the week of July the 13th to July the 17th, 2020. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money, especially right now when there's so much volatility in the market. So as usual, we'll get started with our calendar here. So in terms of, before we dive into the news here, in terms of what's going on overall in the markets, we've seen the markets have been a little sideways over the last 2-3 weeks here. And even this week, they continue to be sideways. And in terms of general information or news that we have, overall we are seeing an increase in COVID-19 cases once again. In the US, several states are basically, they're above the previous numbers, and the number of cases as well as the number of deaths are increasing, unfortunately. And also we have seen in different parts of the world, we have seen Melbourne, we have seen other places as well, Hong Kong, going back into lockdown. And even in the US, some of the states that were opening, they're not opening again. So they're not opening or they're delaying the opening, or they're closing things down. So that is a bit concerning, and it can have an impact on us as we trade. So keep that in mind. On Friday, we did see that the stock market was dropping, but then there was a news that came out about vaccine. Gilead put out some comments in regard to the vaccine tests they were doing, or the medicine that they were trying out on the COVID-19 patients, and they saw, I think, almost half of them actually recovered, or they were on their way to recovery, or I should say, the medicine was proving to be useful in supporting the recovery. So we'll see how that goes. So anytime there is news about about vaccine or medicine for this, that's positive, and this is why we saw that the market reversed directions on Friday. So coming this week here, overall though, right now it's in that holding pattern where it hasn't quite turned bearish yet, but it's just waiting for something to happen. So far we have seen that any of the positive news are pushing the market up. The stock markets have been going up since, I want to say, March. So we'll keep an eye on things, but we have to be careful here, because as the numbers keep piling on, that will be negative, and we may start seeing basically people asking to go back into or at least I should say the authorities asking people to go back into lockdown and shut things down. And if that happens, that will be negative. So just keep an eye on that. Coming up here in terms of news, we do have Bank of England, Governor Bailey speaking. And at this point, Bank of England has actually left the door open for negative interest rates. So any sort of forward, if they tell us or give us some idea of what they are thinking, if he mentions negative interest rates, that will be bearish for pound. Or if they say, not really looking at negative interest rates at this point, we'll wait and see, that will be positive for British pound. So that's what we need to keep in mind. And then we have business confidence numbers for Australia, trade balance numbers here for China. So when China does well, we see a positive impact on Australian dollar and New Zealand dollar, just because those two countries are so tied into China. They're big exporters to China. So if we see that Chinese trade balance numbers come in above expectations, that will be good for Australian dollar and New Zealand dollar. Now we also have monthly GDP numbers out of UK. It is expected to go up, and if we see that the numbers are better than this here, that will be positive, because that will show that the economy is getting back on track. So that would be positive for British pound. So not much here. Now we do have Bank of Japan here in terms of their monetary policy statement. So this is important for our Japanese yen crosses here. And Bank of Japan has been a little more dovish than some of the other banks that we have seen. They have raised concerns in regards to the strength of the economy and the recovery and the production for the year, or actually I should say for the next couple of years. So if their statement is dovish again, that will be negative for Japanese yen. So we'll keep an eye on that. And of course, we have a lot more stuff on Wednesday here. We have Bank of Canada monetary policy statement here as well. Not expecting an interest rate change at this point. Bank of Canada is likely to just wait and see. And if that's their stance, I wouldn't expect much of a difference. But if they are negative in terms of the forecasts for the economy, then we are likely to see a negative impact on Canadian dollar. So keep that in mind. And then we have CPI quarterly numbers for New Zealand. They're supposed to be down a little bit, but if the number comes in above expectations, expect a positive response out of New Zealand. If it comes in below expectations by a bit, I wouldn't be too concerned about it. Right now, we're seeing that the negative numbers are not having as big an impact or as negative an impact on the currency, but the positive numbers are having a bigger impact and they're pushing the currency up. And then we have China here, GDP numbers. Again, any kind of positive data out of China will be good for Australian dollar and New Zealand dollar. And then Thursday here, we have ECB. At this point, ECB is not expected to make too many changes. I think for the most banks, we are probably in the wait and see pattern, but expect them to talk positively about supporting the markets. So if that's the message, again, I wouldn't expect much of a change. However, any sort of negative comments in regards to Brexit or what will happen in terms of the economy now that the Brexit extension timeline is passed, those comments could make a difference. So that's what we need to focus on for ECB here. So expect, we could expect a bit of a volatile week depending on what they have to say. If all the central banks just basically stay in the holding pattern, then there wouldn't be much of a difference. But should they decide to change their comments or provide some sort of forward guidance, then we could see volatility this week with the number of central banks we have on the tab here. Core retail sales here, of course, if the core retail sales come in positive, it will actually be positive for the stock market, and we could see the US dollar drop. So any of this, sorry, excuse me. So any of this positive data that we are seeing out of the US is pushing the stock market up in the US. And when the money is flowing into the stock market, we generally see a drop in the US dollar because US dollar is a safe haven, a currency. And when the data is coming up positive, that means more investors are moving into what's considered risky markets, and that's those are our equities. So because of investors going into equities, it causes a drop in the US dollar. And when we go into that risk-off environment, which may happen, and that's what we are keeping a close eye on. So once we go into the risk-off environment, that's when US dollar tends to go up. Okay, and then on Friday, again, we have Bank of England, Governor Bailey here. So at this one shouldn't make as much of a difference. It will be the more of the first one that's more important. And then, oh, actually, any comments in regards to Brexit will be important from Bank of England. Now that there is no extension, basically the Brexit is going to happen. So that will be the main thing we'll have to focus on there. Consumer sentiment numbers, again, expected to come in positive. If that is positive, if the number is higher than this or matches this, that means stock market is likely to go up, and we may actually see this one drop, US dollar drop as a result of that. All right, so let's go into our charts now. We'll start off with Euro US dollar. So Euro dollar is trading in a range still. It's been stuck in this range for a number of days here, or actually I should say number of weeks. So we have 1, 2, 3, 4, 5 weeks. It's been in this range. So at this point, still expecting a range bound move here. And if we see market going into the risk off mode, that means we see price actually, or we see stock market starting to drop, then we are likely to see a drop in this as well. So basically, I'm looking for a move back towards the bottom of the range. But prior to that, it may go and test the high once again, and that's what we'll have to watch out. If it goes and tests the high, and if it holds below, then basically we're looking for a move back towards the bottom of the range. But if it doesn't go all the way into the high, we may just see a bit of a pullback and then a drop from here. But expecting a range bound move unless something really positive comes out, like there's a vaccine that's discovered that can push the market higher. But at this point, it's been stuck in the range for a bit, so still expecting that. So neutral bias for euro dollar, and looking for a move between 1370, or I should say 1.1370 and 1.1170. Pound here, pound was super bullish last week, and now we have another bullish candle close here. It's managed to go above this resistance. It's not holding there yet, but it is looking bullish, so we could see another move higher. And in this case, now having said that though, if we go into a risk off mode, all the dollar crosses will drop in that case. So just keep that in the back of your mind. But basically, we're looking for a move higher here. So bias is bullish. Watch out for resistance at 1.2720. That's an important support resistance level here. So that's the first target. And should it go through that, we're looking at 1.28. So bias here is bullish for pound dollar. Aussie dollar here, this one has also been range bound over the last few weeks here, last 4 or 5 weeks. We see a pin in the top here. Now, this is similar to this one here. So bias here is neutral to bearish. We are into the high of the range, or almost into the high of the range here. So looking for price to turn around. It may again retest the high, so watch out for that. But looking for a drop, as long as it holds below 0.70, I'm looking for a drop. So bearish bias, target is 0.6800. New Zealand dollar here, this one has been bullish. It is into the high of the range. Again, as we can see here, price has been trading in this range. Should it go through though, because we're right into the high, that's a possibility. We have to look at next target at 0.6685 and then potentially 0.6750. However, we have to keep in mind the top of the range. If it doesn't break, then we could see a move back down. So right now the bias is bullish to neutral, or neutral to bullish. So once it crosses the 6600, then only then would I look for another leg higher, because it is holding high here and it's consolidating into the highs, which means it could go higher. And that's something we'll have to watch out for. But for that, we need a break here first. Until then, the move that I would look for would be a move back into the middle and then the bottom of the range. So neutral to bullish bias for New Zealand dollar. Dollar CAD here, this one has gone in both directions. We did see a drop back into the support here, but since then it has turned around and now it does have a bullish candle close here. So this one again is trading in a range, and markets have been just sideways for a while here. So here we see for 5 weeks, it's been stuck in this range. It hasn't really done a whole lot, just chopped back and forth. So right now with this one here, there is a bullish bias. I'm looking for a move back into the top of the range here. So neutral to bullish bias here for dollar CAD. And target here will be 1.3720. Euro pound here, this one is looking bearish here. And in terms of our targets, first target here is 0.8910. And actually, let's take a look at a pullback level. So we could get a pullback into 0.8970. And then a drop here. So bearish bias here. 0.8910 is the first target, 0.8865 is the second target. One thing to keep in mind is I have seen, well, what sometimes they will do is they will hold one and move the other. So this week we saw that Euro didn't really do a whole lot, but British pound was pushing higher, and same thing last week as well, where Euro was holding but pound was pushing higher, and prior to that we were seeing pound drop and Euro was going up or holding. So they tend to switch these ones. So keep an eye on this one here, and we'll be able to see which one's stronger, and that may be the one to trade. So just something to watch out for. But based on this here, bias is bearish. 0.89 and 0.8865 are the two targets. Euro Swiss franc here, this one is consolidating here. Again, it hasn't really moved a whole lot over the last 3 weeks. So this one, and with Swiss franc here, Swiss National Bank is notorious for intervening in the markets. If it doesn't break through here, I will look for a move back here. So this is looking range bound at the moment as well. So bias for Euro Swiss franc is neutral. So they don't want Swiss franc becoming too strong, and this is why they try to basically manage the price on it. Okay, and then we have pound Swiss franc here. Nice solid bullish candle close here, looking for further move higher. Now keep in mind though, when we drill down to, let's say, the daily here, it hasn't really been one big straight push higher, right? It's been slowly making its way higher, which means it is prone to reversals. And if we see that market goes back into the risk off mode, then this is likely to, all the Swiss pairs are likely to drop, all the yen crosses will drop, and all the dollar crosses will drop. So the risk on and risk off is very important at this point. Okay, so this is looking bullish. First target here, 1.1930, and then second target is 1.2040. So bias is bullish here. So bias is bullish for pound Swiss franc. Dollar Swiss franc here, this one is neutral here. We see that price did drop last week. We were looking for a drop. It did drop here. However, it hasn't managed to break through the support yet. So at this point, the bias is slightly to the downside. So I would say neutral to bearish. We may get something like this. If it holds below this 0.9450, then I'm looking for a move lower here. But then we may also get a turnaround for here, so from here, so watch out for that. So bias here is neutral to bearish for dollar Swiss franc. Only if it breaks through the support am I looking for this 0.9327. But if it breaks through this one here, if it doesn't hold, so let's say the stock market starts to push higher, we could see this one go back up into 0.9500. Pound yen here, this one's looking neutral at the moment. We do see bullishness in it. Excuse me. excuse me. Okay, so here, this one's neutral here. We have a large pin, but there's still bullishness in this candle, which means it could go higher into 136.35, which is a stronger support resistance level, or even into 136.50. So keep that in view here, but it is into resistance at the moment. So if you take a look at our support resistance right into this area, this is where price has reacted previously. So this is also an important support resistance level all the way from back there. And if it holds below this, then looking for price to come back down again. And even with this one here, we see that for the last few weeks here, price has just been sideways as well, even though the range is quite wide here. But it doesn't really have any sort of a trend in place. It's just been back and forth. So a lot of these pairs at the moment are sideways. It's almost like the market is waiting for something to happen. So for now, bias is neutral here as well. If, or neutral to slightly bullish, I should say, if price holds below 135.85 level here, which is the high from last week, which is also our top of the range here. If it holds below that, then we're looking for a move back down towards the middle of the range potentially, and it could also be towards the bottom of the range. So keep that in mind. So bias here is neutral to slightly bullish here. Oops. Okay, there we go. Euro here, Euro yen looking neutral to slightly bearish. Actually, we see that there's a large pin. However, price is into this strong support as well. And this is where, for it to move lower, we do need to see this break through the support level and then towards the bottom of the range. So this one is also stuck in a range. So this is the range that Euro has been trading in for the last 5 weeks here, stuck between 122 and 119.30. So it's rejected the high of the range now. We may get a pullback, but as long as it holds below 122, looking for a move back towards the bottom of the range here. So neutral to slightly bearish here for Euro yen. Dollar yen here, this one as well, stuck in a range for last several weeks. This is where we are. Price has basically gone back and forth here, except for this one couple of days or a couple of weeks where it went up and came back down. It's just been sideways here. This week, we do have a weekly candle close here. However, we are almost in towards the bottom of the range here, so we have to be mindful of that. This one could change. For now, though, a bias is neutral to bearish. I'm looking for price to drop into 106.50, and only if it goes through that, we're looking at 106. So neutral to bearish bias here for yen. Our yen crosses may be volatile this week, just because last week we saw weakness in the stock market, and when the stock market starts to drop, all the yen crosses will drop as well, because yen is our one of our safe haven currencies. So with this one here, we do have a bearish pin bar. It is looking weaker than some of the other ones, for example, pound yen. So bias here is bearish. As we can see, for the last 5 weeks, this has also been stuck in a range. So market literally seems to be in a waiting mode here. And the longer we are in the waiting mode here, the bigger the move, right? So when market consolidates over a large period of time, the moves tend to be much, much bigger. So in this case, if the market starts to drop, we may see a big big drop, and this is the stock market I'm talking about, but once we see the stock markets drop, we will see these ones, our crosses, drop as well. Okay, so bearish bias here, 72.50 is the target. New Zealand yen here, this one as well, even though there is still some bullishness in here, we see that price is into strong support resistance level here. And as a result of this, this is where the resistance is. As we see, price has struggled here previously. So essentially, I'm looking for a move back down into the middle and then bottom part of the range here. So neutral to a bearish bias for this one as well. And target here would be 68 as the second target. So 68.00 as the second target, so 69.00 as the first target. CAD here, CAD was weaker. We saw that price was able to, this is the daily. So here we see price has been stuck in a range here as well. Like I said, pretty much everything is here range bound. And we have seen that price rejected the high of the range, even though there was solid bullish candle close here. Because we are in that range bound market, price stayed below the high of the range and we have seen a drop. So with this, this week, I'm looking for a move towards 78. Now, this will be the problem. So if it doesn't drop through this support level, it's likely to go back in because we are in a range bound market at the moment. So bias right now is neutral to bearish for CAD yen, and the first target is 78.00. Now, only if it drops through that will I look for the 77.20 will be the next target. However, if it holds above 78, we are going back towards the top of the range. Okay, so yen cross is all done. Let's take a look at our commodities now. Silver actually was able to break through this resistance here. We have a large bullish candle close. On the daily, it's still holding above the support resistance level at 18.45. So this one is looking bullish. But keep in view our resistance. It has not managed to close above the resistance yet. So unless it does that, there is still room for it to turn around. But for now, looking bullish here. This is the type of move I would expect, and only if it goes through this, then we're looking for the next one up, which is 19.60. So bias here is bullish. Just keep in mind the resistance. If it holds below this 19 level, then it can again become a range bound. But this one's still holding, so it held the support here, did another leg higher, consolidated. So this one could be another leg higher. So just watch out for that. It has reversed this entire drop from the when we first started COVID. Okay, so gold here. Gold also looking quite bullish. It's in the daily, from the daily perspective though, it is pulling back, but it seems to be holding the 1795-ish area here. It may pull back a little bit deeper. We'll have to wait and see. But if it gets stuck here at 1790, it can just do another leg higher from that. Gold overall still is bullish. So let's go to our, let's zoom out. We need to see some targets here. So bias is bullish here. And in terms of targets, we are looking at 1815 and 1830 here. But we may see a bit of a pullback here before it goes back up. So watch out for that. I will say 1788. It could even come into 1780. So those are the two levels I would watch for pullbacks. But there is bullishness in it overall. This has been in a huge bullish trend since August of 2018 and still holding on to that trend. So bullish bias for gold. Oil here, oil's been stuck in a range here. This is the daily chart. And if you take a look at the weekly here, we see that price is still stuck in that range. It is pressuring the the top of the range, though, hasn't managed to break yet. But this one, from the weekly here, this looks bullish here, like a bullish pin bar. But again, it hasn't quite made that move yet. It's still overall, it's still in that range. So now we need to see, does it have the strength to break through, or are we just going to see a turnaround? So for now, though, bullish to neutral bias here. If it breaks through this support to the downside, then I will look for move back towards the bottom of the range. So for now, neutral to bullish bias for oil. Copper here, copper looking extremely bullish. And as we can see, huge move up. It blew through this resistance here. And now we have a very strong, almost a Maribozu here. And now next target here. Next target is 2.90. And potentially after that 2.95 here. So watch out for this pullback back into 2.84. And if it holds above, we are likely to see that next move higher. So copper has redone this entire move. This whole move is has been reversed here. Now looking bullish, we are looking for this 2.95 target. So bullish bias here for copper. Bitcoin here, I do not have the weekend numbers here, but it is still trading in that range. As we can see, it's been sitting towards the bottom of the range. So for now, bias will be neutral till we see it break out of the range. It has been pressuring the support, but it's not quite done yet. Overall, it's still holding that high, and we could see a move higher. We'll have to wait. So for now, neutral bias for Bitcoin as well. Stock market here finished the week quite in a bullish. This was quite a bullish day here for S&P 500 Friday. Excuse me. For the last entire week, it's sat in this range here. It failed to break through. It did try for a couple of days, but like I said, that those comments came out about Gilead here, and as a result of that, we did see it go higher. It is looking bullish, but again, be mindful that it's been stuck in this range for several weeks. So 1, 2, 3, 4, 5, 6, 7 weeks, market has been stuck in this range. Now, like I said, the longer market stays range bound, the bigger the move. So if this one breaks out to the upside, it could go all the way into the high. It may not get there in 1 week, but that will be the longer term trend then. So in this case, this is looking bullish. Next target would be 32.20. And if it goes through that, then basically it could just shoot up. So watch out for that. As soon as it breaks out of this range, because the range high is technically at 32.20. So once it shoots out, it could go for a while. So bullish bias, neutral to bullish bias, because it's still in the range. First target is 32.20. And if it gets out of that, then we are looking at 3,300. So neutral to bullish bias for S&P 500. Nasdaq here looking quite bullish. Nasdaq has just been one-way street. All the techs, or not all the techs, but a lot of the tech stocks are doing extremely well, and they have done extremely well during COVID, because we are using technology way more today than we did pre-COVID. As a result of that, all these companies have performed well, and the stock has done extremely well. Amazon stock has doubled. So this is why Nasdaq is made up of all these tech companies. So this is looking bullish here. And next target here is basically 11,000. So bullish bias for this one. Doesn't look like it wants to turn around anytime soon. So this is looking bullish. Dow Jones here. Dow Jones is still essentially stuck in this range here. It's trading. This is a daily chart here. So on the daily, we see price has been going sideways here for some time now. The Friday candle close was very bullish. So overall, we're bullish for the week, but the entire week, it just traded in this range. Hasn't really done a whole lot, but because it's holding the high and because of that, we can see another leg higher or another move higher. So keep that in mind. Right now, neutral to slightly bullish bias. First target would be just the high here, 26,420. And this is where we have to watch out. If it doesn't go through, we could see a move back down here because this is the range that it's been trading in for the last 7 weeks here. Yeah, so it's been trading in the range for the last 7 weeks. If it breaks out though, like I said, we could see it go there and over time there. But for now, bias is neutral to slightly bullish. DAX here, DAX also closed the day positive there. It's still stuck in a range though, so bias here is neutral. But if other markets start to take off, this is likely to do that as well. First target is 12,935 and then 13,100. So this one here, for the time being, I'm going to say neutral bias because technically it hasn't really broken out of the range, and we will turn positive on this or bullish on this once it crosses the highs here. So for now, bias is neutral. Next target is 12,935 and then 13,100. And Nikkei here, oh sorry, FTSE here first. FTSE also trading in a range here. This is the range, as we can see, that it has been in over the last several weeks. Now we do have a bearish candle close. For the time being though, I'm still neutral on this because it has rejected the support level here. So we may see just move back here towards the top of the range. So bias for this one is neutral. It's still in the range, so we need to watch the bottom of the range at 6,000 and then top of the range at 6,320. So neutral bias for FTSE. And then last one here, we have Nikkei. Nikkei is looking bullish. It's also been trading in a range, as we can see, for all these weeks. It's been stuck here. It's pressuring the high, so neutral bias at the moment till it breaks out. And once it does, we're looking at 23,000 is the first target, and then 23,300 is the second target. So right now, neutral to slightly bullish bias here. Dollar index, I actually unfortunately don't have the dollar index in these charts here. This particular, sorry, I don't have. You know what I'll do next time though? It's weird that I don't have dollar index on these charts. Next time I will pull up the dollar index chart on one of the other platforms. I'll have it ready and we'll take a look at that. So we'll wrap it up here. You guys have a wonderful trading week. I will be posting the daily market analysis on the YouTube channel. So if you're interested, you can check that out. Just do a search for Trading with Venus and you will see me or my videos. So I will see you next week then. You're welcome. Bye for now.